$250,000 per individual. So if you had a joint account, you could be insured up to $500,000. So your money's safe with the bank. Even if the bank goes under, you're still safe. So that's one reason. Also, it's convenient. You basically, with your cell phone, can look at your account any 24 hours a day, move money, pay bills. The cost, it's pretty inexpensive. For instance, Foothills Bank offers free checking, so you don't pay a service charge. So that's a good way to do it. Also for security, if anybody's ever lost something or had something stolen, misplaced it, if your money's in the bank, you don't have to worry about cash, because once you lose cash, it's gone. And then also we can help you plan for your financial future through savings and credit when you're ready for that. Now, the next slide is checking accounts. What is a checking account and why should you have one? So if you could go to the one more slide. Okay, like I said, it's safe. It's safe because you don't carry cash. The money's always in the bank. You can access it 24/7. Even if there's an error, you just pick up the phone, call us, we'll help you work through it. It's convenient and easy to access. If you have mobile banking, you have your bank with you at all times. If you have a debit card, you can purchase things with your debit card. Again, the security feature through the banks is we have federal and state laws that we have to abide by. So everything we're looking out, whereas we're also trying to make sure your money is protected. And again, we can help you plan for your financial future. Basically, a checking account allows you to start a financial footprint. Chances are you'll eventually want to apply for a credit card, buy a home, buy a car, something that you can't pay cash for. So by having a checking account, you have records that you're putting money in and taking it out, and you're doing so responsibly. Mortgage companies, when you apply for a mortgage, they're automatically going to want to see 12 months of financial statements, so your bank statements. So it's easy, you can pull it up. If you're on online banking, you again have it in your pocket. So that's your footprint, especially if you start young. It's never too young to start. Even if you're not 18, you can still have a checking account. If you're not 18 and don't want a parent to sign for you, you can open a savings account. And again, you'll have a team of professional bankers there ready to help you. Next slide. To open an account, we're going to ask you for information. You do need to have a government-issued photo identification. If you're a student, we're going to want to see a student ID and maybe your social security card or a second piece of identification. At Foothills Bank, we have accounts that you can open it at zero. Our free checking account, you can open it, and then if you're expecting a paycheck or college scholarship, they can do direct deposit into that. So you can open it with a zero balance to get started. One of the federal regulations that we do have to follow is the Bank Secrecy Act. And basically when you go into a bank, you'll probably see a lot of disclosures on the bankers' desks. We have to disclose our funds availability process or policy. So what we do is when you deposit funds in the bank, a check, not cash, but if you do a check, sometimes depending where the check is from, we may have to place a hold on it. Of course, if it's a local check, your paycheck, we wouldn't put a hold on it. So your funds can be accessed immediately. We do give immediate credit on that. Another disclosure that you're going to want to see is information about opening a checking account. We're going to ask you your name, your address, your birth date, your social security number, your driver's license, and we're going to ask a few questions that you may think personal, but we do have to require that because everybody you hear on the news about fighting terrorism and money laundering. So what we do is we do have to collect that information to verify that you are a legitimate customer. Next slide, please. When you open a checking account, you have so many ways to access your funds. You can make purchases with your debit card from your account. When you go to, let's say you go to a grocery store, you can also ask for cash back. So if you aren't by an ATM, your groceries are $50 and you need $20 in cash, you can do it all in one purchase. You can also make deposits and withdrawals through an ATM with your debit card. And again, once you make a deposit into an ATM, we would process it the following day and you would get immediate credit for it then. You can also visit your local bank, because we like to see customers and get to know what's up with you in your life, and make deposits and withdrawals there. You can also use online banking, and online banking is going to show you a record of all your accounts, and you can name your accounts whatever you want. You can transfer money from accounts through online banking, and you can enroll in bill pay, which will allow you to pay your cell phone, your rent, anything like that. You can set up your bill pay where you specifically name a date, or you can set it up to automatically pay on a certain date. And so then that way you don't have to remember to schedule it each time. You can also set up automatic payments through the company. So for instance, your cell phone, you can go to them and make an agreement for them to charge your bank account for your bill. One of the advantages of bill pay is you can stop it or not pay it. So for instance, if you don't want to pay it on a certain date, you can cancel that payment. Whereas when you're on an automatic payment, you have to go to the company and request that they stop payment. Sometimes it works the first month and sometimes it doesn't. So the bill pay is a little more flexible and you have more control. And like I said, you can transfer funds from one bank account to another bank account, move from checking to savings. Or if you have a parent's account and you're a signer, they can move money to your account. So that's always good. And of course, you can write checks the old school way. Next slide. And with a checking account, we have some electronic services. Again, I talked about ATMs, so you could get cash out of the ATM, or you can make deposits through the ATM. I mentioned the automatic bill pay. These are services that we don't charge. When you do make an ATM withdrawal, if you're in our network, there's no charge. If you go to another, like a freestanding ATM, there may be a charge. So always look for the disclosures when you're withdrawing funds. We also have mobile banking. So you can either sign up for online banking through your computer at home, where you can do everything, and it will be mirrored through mobile banking. And with mobile banking, you have the remote deposit capture, where you can just take a picture of your check and it will be deposited. So you wouldn't have to go to the bank if it's at night or on the weekends and the bank is not open. That won't stop you from making a deposit. You can go ahead and just do it with your mobile device. Next slide, please. Some accounts have the ability where you can write checks and some don't. It seems like checks are kind of fading away from the world, but it's always good to know how to fill out a check. So in the upper right-hand corner, you have the date, and you would want to put the date. That's important because checks are only good for 6 months. So if you wrote a check 7 months ago and somebody were to come into the bank to cash it, we would not cash it because it's only good for 6 months. Then where it says pay to the order, that's who you're writing the check to. If you're paying your cell phone, if you're loaning money to a friend, you would spell out their name. Then you put in the numerical dollar amount. So if, let's say it was for $10, and then the next line, you would spell out $10.00 and then draw a line. So next time you look at a check or you get your paycheck, you'll see how checks are filled out. Where it says for, you can put a memo. So if you write a check for to reimburse your friend for something, you can put the name there. It just helps with your record keeping. And then of course on the right lower hand is where you're going to be signing your name. And you'll want to sign it as closely as you sign your signature card. If you're ever wondering about what all the numbers are at the bottom of the check, this tells us what it is. The ABA or routing number is always going to be the lower left-hand corner. And what that does is that identifies the financial institution where the account is. So you can even go on Google and you can Google a routing number and it'll tell you what bank it is, because not all banks have a complete description. At the top middle portion is where normally the bank's logo would be. So if you're ever curious, you can Google where the ABA, where the account is held. The second group of numbers on the bottom is your checking account number. And that's your full account number. And then the next group of numbers is your check number. So you always want to look to make sure the check number at the bottom matches the check number in the upper right-hand corner, especially if you're receiving a check from someone that you don't know. That's a good way to double check, because sometimes the fraudsters don't always do it as completely as you would like. Also, I don't know if you've heard about SWIFT numbers, but the routing number identifies the bank, the financial institution in the United States. For foreign transactions, it's called a SWIFT number. So if you get a check from, say, somebody from Canada, it may have a different group of numbers that don't look like a typical routing number. Next slide. The most important things whenever you write a check or even get ready to use your debit card is always check your balance to make sure there's enough money in your account. And just remember, you keep a running total of your account, and then that way you won't run into problems. Make sure you complete all the blank spaces on the checks, because if you write a check to Joe and you don't put Joe's last name, somebody can alter it. And that's something that we see quite a bit. And always keep record of your transactions so you always know how much money you have in the bank. And the reason why I say that is because next slide, please. Different banks have different fee schedules. As we talked earlier, Foothills Bank offers a free checking account, but we also have other accounts. We have some accounts that pay a higher interest rate, but you do have to keep a minimum balance. So for instance, if you have an account that's earning interest that has a $1,500 minimum balance, even if you drop below that $1,500 for one day, you may get a minimum balance fee. So make sure that you're in the right account. Once you open an account, review with your banker, because we may have a new product that can benefit you. So that's why you always need to keep in touch with your banker. Get to know your banker. Like I said before, the ATM, if you open an account with our bank, we don't charge you to use the ATM at our bank, or as well as any Glacier banks. So we're in 8 states. The reason why I say it's really important to know what your balance is there's such thing as an overdraft fee or a non-sufficient funds fee. And those can be pretty pricey, and we'll talk about that in a minute. If you lose a check, for instance, if you mailed a check to pay a bill and it's lost in the mail, and they call you and say, we haven't received your check, you can always contact the bank and stop payment. If it's a check lost in the mail, there's no fee. If it's a check that you tore up or something, usually those fees can be waived, but there are some circumstances that you will have to pay a fee. Next slide, please. Oh, I think we skipped one. Did we go? Okay, I think these are out of order, but I'll just go through the overdraft fees. As I talked before, it's really important to remember what your actual bank balance is, because if you go overdrawn, which means that you have spent more money than was in the bank, you will be charged an overdraft fee. Now those overdraft fees can be $30, they could be $35. So even if you make a $10 mistake, it could cost you $30. So you always want to keep track of your balances. One thing is when you go to use your debit card, which most people are going electronic or paying online, those usually go through right away. So what you see on your balance on your online banking is going to be accurate. But if you've mailed a check somewhere, sometimes that can take 10 to 15 days to clear. So always keep in mind, if you write a check, make sure you've deducted it from that balance that you see online. There's a couple of ways you can avoid those fees. One could be if you have a savings account, you can do automatic overdraft protection from that savings to your checking. So for instance, if you make that $10 mistake, it will transfer over the $10 to cover it, and that will save you the $30 fee. There are also overdraft protections line of credit, and that is a credit product, and you do have to be 18 to have that. And it's a small line of credit that will cover your overdraft. And of course, once you get paid or get your funds deposited, transfer it back, and that will save you the $30 as well. Next slide. You should be on deposit accounts. And
is this the right one?
Yeah, thank you. Mm-hmm. So I'm Nicole Reese, and I've been in banking for 13 years. I started as a teller, went into a banker, then business banking, then branch manager, to now I am a CRA coordinator, which what that means is I go into our communities where all of our branches are located, and I make sure that we're reaching out within our nonprofits or just to make sure that we're lending to everybody, and we're not picking and choosing. And I also make sure that we are depositing, or we're donating funds to nonprofits, and then also that our branches are participating in service hours, so they're out there volunteering their time within our communities. So I actually have a very fun job at the bank. I deal with a lot of nonprofits, and so it's a really fun job. But I'm going to take up where Kathy left off. She already covered the checking accounts. We do have several different types of deposit accounts. We have the checking account, savings account, and then we have accounts that we call money market accounts, which are very similar to savings accounts, but you're able to write checks on them as well. If you want to go to the next slide. Thank you. So savings accounts, the difference between a savings account and a checking account is a savings account is an account where you want to put your funds, where you're planning to save for something. It doesn't have to necessarily be big, but you could start a savings account for a trip, or a savings account for a new car. And I always recommend, when you do start a savings account, to look at your budget and see what you're able to afford to put into this account, because you don't want to put $20 a paycheck in your account, but then take $20 out at the same time. Savings accounts are federally regulated, so they do like to make sure that you're actually keeping the balance in there and not depositing, withdrawing, deposit, withdrawing. Like I said, our money market account is a savings account, but also you have the capability of writing checks on this account. So it's a great account to keep extra funds in, and you might have something that comes up that you'll be able to just write a check on it as well. Then we also have our CDs, which is a certificate of deposit. And what a CD is funds that you're going to commit to keeping it in this account for a period of time. So they have CDs that you could keep keep the balance in for 3 months or 6 months or a year, and they actually go up to 10 years. So CDs are fantastic if you plan on keeping that balance and building up your savings, basically. Next slide, please. So the objectives of savings accounts and checking accounts are to track. You want to create a budget, basically. So the objective is to create a budget. So you're going to want to track your daily spending habits. You're going to complete a budget, your monthly expenses you're going to add, and you're also going to add your entertainment. You'd be surprised if you sat down and actually figured out how much you spend a month on Starbucks or fast food. I challenge everybody to sit down and keep track of what they spend for a month, and you'll just be shocked at what you spend your money on. And there are so many tools out there to help you create budgets and to help you manage your money. Next slide. So a spending plan. This is something that also a banker could help you with. It's also, a budget. You do a step-by-step guide of your expenses, and you put a time frame on it. So, you want to create that budget, make sure that your income is balancing your budget, so you're not overspending on things that you really don't need. Next slide. So, like I said earlier, when you're deciding to start a savings account, you really want to be realistic. If you get a paycheck for $200 and every month you're barely scraping by, you're going to have to sit down and reevaluate your spending and see if it's realistic to start a savings account. And be specific, set up a time frame, and then you want to take action. Say you want to save up for a car. You're a freshman in high school and you want to be able to purchase a car by your senior year. Sit down, figure out how much a car is going to cost, and then be specific and how much you're going to have to save a year, and then break it down even by month. Next slide. Okay, and then, like I said, keep track of your daily spending. Determine what your monthly income and expenses are month to month, and then find ways to decrease and maybe even find ways to increase your income. So if you realize you're spending more than you're making, you might want to get a second job and then be able to start a savings account. Okay, next slide. Again, this is just reiterating basically what a want and a need is. Today, a cell phone I would consider a need. It's there for when you could have a car breakdown, you got left somewhere. So you want to make a difference of what's a want and a need. A Starbucks would be a want, and really take your budget and put together what you feel is a want and a need. Your car payment, insurance, things like that are all needs. They're not a want. But new games for your PS4 or something like that, or going to the movies, that would be a want. Next one. So determine your income and expenses. Again, your income would be your jobs, your allowance. It says interest and dividends, so that would be funds that you're making on your money that you already have. So your savings account, you'll be earning interest, and then your expenses would be your bills, your transportation, and your entertainment. Also, it would be your food, your clothing. All those are expenses as well. Next slide. What you really earn, income, this is extremely important. I know when you get your first paycheck or you start your first job and you're going to be making $15 an hour, you already calculate in your head, you're going to be working 8 hours at $15 an hour. And then when you see your first paycheck and you're like, wait a sec, I've been shorted. I don't have all my funds here. That's because there's going to be deductions. There's going to be the federal and state taxes come out, your Social Security. If your employer has a retirement savings like an IRA, that's going to come out. Then you're also going to have your insurances, your vision, your eye, your medical insurances are going to come out as well. So knowing what you make and your gross income with the deductions is extremely important. Next slide. And I love this because as an adult, we really don't get to do this, but help, I cannot pay my bills. What payments should be made first if you don't have enough money? And that's where it comes to, you have to break it down. If I don't have enough money what do I have to pay first? Well, of course, my mortgage would be first, and my car payment, because I need transportation to get to and from work. So it's really important to know what bills should always be paid first and how important they are to you and to your living. So that, I love this one, but go on to the next slide, please. So who can you talk to if you can't pay your bills? There's so many different people that you could ask for help. You could even walk into a bank and a banker would sit down with you and go over your expenses and how they can help you budget and everything. But you should always talk to a parent or a guardian, adult you trust. They can help you sit down and do a budget as well. And like I said, you always want to pay your necessary expenses first. So what is going to keep you getting up every morning, like your mortgage, your car payment, your gas, your food? Those are all extremely important bills. And then it talks about loans as well. So if you get a car loan or a credit card, you always want to pay your highest interest first, because otherwise it's just going to keep accumulating. And the last one, it says talk to your creditors. Like I said, you can walk into any of your banks and sit down and talk to a banker and explain what you need to, how to figure out, how to pay your bills and what you can do, or, the necessary avenues that you can take for help. Next slide. And this, I think, is Kathy.
Hello again. Okay, everybody's going to be working in their life, and you worry about paying your bills, your mortgage, your food, and you want to have a little fun. But the most important thing is to pay yourself first. Nobody's going to look out for you except for yourself. And you may think, well, I don't have that much money. How am I ever going to start saving for the future or getting a down payment for a car? Well, this is how you're going to do it, is you're going to remember you work hard for your money, so pay yourself first. You can go on to the internet and look up a savings tool, and it's a little calculator. And you can figure out how much you want to save. So for instance, if you want to save $20 a month, for 10 years, it'll calculate how much money you will have at the end of that time. So I encourage you, even if it's $5 or $10, give up a Starbucks, give up a video game, give up something just a little bit to start your savings. You'll see it pay off in the end. And then the goal is, if you don't have to touch your savings, never touch your savings, because you will be so much farther ahead. Next slide, please. But paying yourself first, you want to start a savings account, or even if you don't want to start a savings account, you can have a little mental balance running in your checking account till you feel like you can open that savings account. So for instance, if you have money in the checking account, just remember, I can't spend that $100 because that's going to be my savings. But the rule of thumb is to save 5 to 10% of your take-home pay, which is after the taxes and deductions, and put that into your savings. Even if you start small, $25, $50 a month, it's a small step that will really pay out in the future. So remember, paying yourself is the number one priority because you worked hard for your money. Next slide, please. Building your credit. Usually the first thing when you turn 18 that can be suggested is to get a very small credit card, maybe even $500. And what you're going to want to do is use that credit card very sparingly. You're going to want to use it, but always make sure that you pay it to zero. So for instance, if you know you don't get paid till Friday and you've got to buy a book for college, you can use your credit card. Then when you get paid, you can pay it off. With a credit card, it's important that you make the payment every month on time, because this is going to make up your history, your credit history. Your credit history, I don't know if you've heard people talk about credit scores. It's on, get your free credit score. But your history of bill pay is 35% of your total. Now, what this is going to mean is the higher the credit score, the better interest rate you're going to get on, for instance, a car loan, or it may even be, can you get a car loan? If your credit score is not that high, you may end up paying 25% interest, but if your credit score is the highest, if it's low, you pay the higher amount. But if your credit score is higher, you may get 0% interest. So it's always important to pay your bills first. You want to keep your credit rating good, and you want to avoid late fees, because once you get late fees, they just compile and compile and compile. So prioritize and schedule your monthly payments. Make sure you pay at least the minimum balance every month on your revolving line of credit or your loans. But if you have an extra $20, you can always pay extra. By paying extra early, you will save interest in the long run. So pay your bills before you do and keep your credit score up. Next slide, please. Another thing you can do is when you do online banking and you have, for instance, your credit card, you can set up a reminder. Oh, my bill is due on the 10th, so go in on the 5th and schedule your payment. So you can set up all sorts of reminders. You can even set up, oh, is my checking account getting low? So if you want to have an alert come up when your account is, say, under $100, then it pops up a text on your phone. So there's so many different tools that can help you succeed in your financial goals. It's really important, like Nikki said, when you're budgeting, to keep track of what you spend money on. Especially if you're looking to buy a house, that may be in the future. But what they're going to want to look at is they're going to want to look at your checking account statements and see that your checking account, your funds are going in from your job, and then that you have enough money at the end of the month that you can afford a house payment. So it just keeps track of what your needs are, which is your mortgage, your rent, your insurance, your utilities, and your phone, and then track what your personal expenses are like groceries, gas, clothes, even coffee and snacks. So basically you determine your future and can set your own goals. Put your money where it matters most. Like I say, paying down your highest interest rate, paying down your debt. If you have, for instance, if you had to charge your school books on your credit card, and you're getting money from your job, and you're getting money from a family member, you can pay half this payment and then half the next month's payment. So you always want to try to get it paid off as soon as possible, so you don't have to pay that interest. So just review your needs and your expenses and determine your own spending habits. Next slide, please. Like I mentioned before, the pay down strategy is get rid of debt as soon as you can, especially if it's revolving debt. Get those credit cards paid off, so then you'll have enough money to pay your car payments, your insurance, and the necessities. So basically, if you sit down and look at your checking account at the end of the month, when you get your summary, you're going to see, I deposited this much, I spent this much. How can I maybe set up a savings account and see what the difference is and how you can save for the future? Okay.
So why is credit important? Credit can be useful in times of emergencies. There's so many times I hear somebody say they had a flat tire and thank goodness they had a credit card because the store didn't take a debit card, or they didn't have cash on them. It's always convenient. It's safer than carrying cash. If you lose your wallet and you have a ton of cash in it, you can never get that cash back. But a credit card, you just have to call the company and they'll cancel it right away. And zero liability on a credit card if it's lost or stolen. So credit cards are fantastic, but also credit is important if you want to purchase a home in the future or a car. This is something that you can pay for over a long period of time. You can get a mortgage, a 30-year mortgage, and that allows you to stay in a, live in a house around the same price that it might be to live in an apartment. So credit is extremely important, and it can affect the ability to obtain a job or rent a house or rent a car, to obtain insurance. It's just, credit is so important. And as soon as you're able to start building your credit, I really recommend it. It's horrible to get into a situation in your life where you really need a credit card, or to be able to move into a house and you don't have any credit. Next slide, please. So, I know Kathy and I have covered a little bit about what is a credit card. Well, a credit card is a convenient form of borrowing funds that you might not have at the time. It is a revolving line of credit. They require you to pay a minimum monthly payment, but again, we really recommend that you only charge onto a credit card if you're able to, the amount that you're able to pay off in that month time frame. Credit cards require you to pay the entire balance every month. They don't require you to pay the full balance. You could pay the minimum payment every month until you're able to pay the full amount. So next slide. So know where your credit stands. This is extremely important. And I put the annualcreditreport.com, because you are allowed one free credit report every year. And maintaining good credit is one of the best things to keep your financial status healthy. A strong credit history is great when you're purchasing a house. Even getting cell phone providers sometimes require credit scores. To get a credit card, just it's incredibly important to keep your credit good and active. Next slide, please. So create a safety net. Save for the unexpected. So savings, a savings fund. So I know we touched base a little bit on this earlier, but I always try to plan for a month's rent in case something would happen, or a month's amount of bills in case something were happen where I wouldn't be able to work. So an emergency savings funds is a separate account, and you can cover expenses during unforeseen event like illness or losing a job, major car repair. Having money at your fingertips can take some of the financial sting out of dealing with your unforeseen events, and could also help you to avoid taking on extra debt. So, you might have your regular savings account where you're putting, a couple dollars here and there way that you're saving for a trip. But then I also would encourage a savings account that it's going to have your emergency funds in case something were to happen where, you had to purchase new tires for your vehicle, or something to that effect. Next one. So ATM and debit cards. I know we've talked a little bit about both already. They are extremely different. ATM, the funds come directly from your checking account. So you have to have the funds in your account to use your debit card, where a credit card gives you an amount of borrowed funds. So a credit card, if you had a $500 limit, you have available to spend up to $500, even though you don't have those funds in your checking account. Next slide. So credit card terms. So we have an annual percentage rate. There's annual percentage rate on credit cards. There's also fees. Some credit cards have annual fees. If you have a rewards card, a frequent flyer credit card where you're using Southwest all the time, they probably charge you an annual fee because you get benefits with that card. There's also rewards credit cards with no annual fees that will pay you cash back for using that credit card. There is a grace period when you make a charge, and they'll send you your statement to know when you need to have your minimum payment due. Next slide. Again, these are the fees that can be associated. So you have your annual fees, could be associated with the credit card. You have your late fees if you don't pay your bill on time. You have the over the limit fee. So if your credit card is $500 and you make a purchase for $510, they're going to tack on a charge there. typically, $20 to $30 for over the limit fee. And then there's balance transfer fees. A lot of credit cards charge a 3% balance transfer from one credit card to another. There's cash advance fees typically associated with walking into a financial institution and withdrawing funds off of a credit card. They'll typically tack on a fee for that. Credit limit increase and foreign transaction fees. So if you go out of the country quite often, you might want to try to find a credit card that doesn't have a foreign transaction fee. Next slide. So the credit report. The credit report will report to creditors. They'll report who you are, how much debt you have, whether you've made your payments on time, whether there's a negative information about you in public records, and how many inquiries are listed in your credit report. And what that means is that if you apply to 3 credit cards in the same month, that's going to actually reflect negatively on your credit report. So it's always important to pay your credit cards on time, and to not request too many credit cards at one time. Next slide. And these are the credit reporting agencies. So there's Equifax, Experian, and TransUnion. So typically, if a financial institution or you're asking for a credit card, they'll typically go to one of these 3 credit reporting agencies to see what your credit score would be. Next slide. And then again, here's the free annual credit report email or web address, so you can reach out to them and get a free credit report to see where your credit score would be. And then I'm going to pass it over to Kathy.
Hello again. That's really important to access your credit report at least once a year. I had a situation where a father used his son's social security number and obtained credit. So his son was 14 and he already had information on his credit report. Because what the credit report, it may not show under your name, but it will show that there was a joint credit with your social security number and a name. So it's never too early to access your credit report. I'm not sure if you have to be 18, but the first opportunity you have, even if you have no credit, I encourage you to take advantage of that free credit report. Okay, the next topic is identity theft, and you probably hear this on the news all the time. Thieves are out to take your personal information. So one of the things we ask for when you open an account is personal information. Because if you call into us, we're going to ask you certain questions to identify it may be you. Because every day we get somebody calling in, pretending to be somebody else, trying to get information on accounts so they can take advantage and spend the money. Next slide, please. There's different ways. These are the most common ways of identity theft. And the first one is phishing. And basically what they do is they send out an email to you and it says, and it's from a reputable company. It could be Facebook, whatever. And they try to get you to share your password or your credit card numbers. So for instance, let's just say Apple sends you a email, says, hey, your iTunes account has been hacked. Could you please send us the credit card you have linked to that along with your password? Well, they have your email. If they have your email and your password, if you share that information with you, they can go in and take advantage of everything you have available on that email address. As a matter of fact, the bank conducts audits and they send all employees a phishing email saying, hey, this is our service desk, please share your password so we can get you unlocked. So they test us, and if anybody responds, they call you and say, you fell for it, don't do that. The next one is farming. And what that farming is they'll send you an email and say, you've won the lottery. Please click here to get your rewards. And you click on that link and it takes you share information with who knows. It's completely fake. It's not from a reputable email account. And then the other thing you could do is hover over that link before you click it, and it will tell you what the true email address is. So if it says it's apple.com and you hover over that fake website, it's actually somebody's Gmail account or something nefarious. The third one is, you probably heard about this, it's skimming. And basically it's the identity thieves place a device over, for instance, the ATM where you insert your card. It's mostly done at ATMs and at gas stations. So when you put your card in, your ATM card to pay, and you put in your PIN number, they capture that information, clone your card, and start making purchases with your information. One of the reasons why it's really important to check your account on a daily basis, or at least every other day, is to verify that all the debits are yours, all your deposits have appeared on your account, make sure the checks have cleared and it's properly endorsed and the time is all right. So basically, you check it. If there's anything suspicious, call us. If the debit is a fraud on your ATM card or your credit card, we can give you provisional credit and get your money back for you. Next slide, please. If you'd like to learn more information about identity theft, you can visit the website, and it has all sorts of things and things you could do to protect your identity. Of course, never share your password, never write your password down. If you have to write it down, make sure it's in a special code that only you will understand. So hopefully all these things we've talked about will help you plan for the future, and we hope you all come into Foothills Bank and visit with us and open an account, or we're here to answer any questions at any time. Does anybody have any questions now they would like to ask?
I do. Okay, so I was just wondering if you had an answer for this. Um, my my credit score went down like 10 points, and like I'd been making my payments on time and everything, and I was just wondering, like, is there a reason that happens, or like am I missing something?
Credit scores are pretty touchy, and it's not something that we monitor because we're still baffled. I would go in to Google it. What are the factors of a credit report? Sometimes if you carry balances, like if you have a $500 credit limit and your balance is 450, that will decrease your credit score. If you have too much charged at a time, let's say you've got 5 different credit cards and they all have balances, that may decrease it. So, it's concentrating on paying off the higher ones first, but they fluctuate. We haven't been able to figure it out either. But Google
So many
web
sneaky rules.
and then just something else, the type of credit bureau that we run at the bank when you apply for credit is different than the credit score that you'll see on if you have a charge account and it says you can get your free credit score. For some reason, what you see online is different than what the credit score is when we run it.
Yeah. Interesting. Thank you.
Welcome. Any other questions? If not, we are finished.
Well, thank you so much. That was great. I would have loved to have something like that in high school. I feel like I
Yeah, thank you
needed
guys
it.
so much for presenting. Yeah, I'm really insecure about, like, not insecure, but I love to learn more about financial literacy because it's what I struggle in. So thank you guys so much for presenting today.
You're welcome, and come
Yeah.
visit us. We're right across the street. We'll be here to answer any questions you have. And thank you so much.